The global gold mania. There's never been such a setup like this. There's never been a better time to buy gold. If you're not invested in gold, it's not too late. I'll tell you why in this video. If you are invested in gold, you're going to want to watch this. I put a list of all the price drivers for gold. There's 15 of them. I didn't realize there's that many. Each of these drivers for gold are going to push prices higher. They will continue to do so just as they have been for a while now. We'll talk about central bank buying trends, of course. We'll talk about Ron Paul auditing Fort Knox gold and what it means for you depending on what they find. Even interest rates and tariffs are all going to have an effect on gold prices, which then will have an effect on what is going to be the best investment group in 2025 is gold mining stocks. And I always like to ask you guys early on, when you're still paying attention, please click like on this video. It helps us get our message out to more people like us, like you and I, and we can help them through what is going to be a pretty tough time in the economy coming up that I've been talking about for decades. And yes, gold prices took a massive hit on Friday. And this is a time when the overall markets are bleeding pretty badly too. And so what do? You sell the stocks that have gone up in price. It's a lot easier to sell a stock that's at a profit than one that's at a loss. And a lot of people are moving money around. Gold prices have been doing so well. Gold mining stocks have been doing so well in the recent history that, of course, there's going to be a little bit of a drop back. It's actually very healthy for the manageable and measurable and maintainable trend of gold prices going a lot higher. But I always tell you that it's about trading in sympathy. You look at Newmont Mining, they came up with great results, wonderful financials, by the way, and the stock drops 5%. And you say, oh no, what happened? I missed something in the report that I'm not understanding. And then you look, and every other gold mining and silver mining company, anything to do with precious metals, all dropped about 5% in one day. That is trading in sympathy. Then you breathe a sigh of relief because it's not about any individual company. It's not a company-specific risk. The whole complex dropped back a bit. This is a great opportunity because these stocks are already undervalued. They've been trading well lately, but then they drop back a bit. If you haven't got in yet, you're going to definitely want to stick with me to the point where I talk about all the gold and silver mining companies that I featured to anybody in the newsletter. One of the price drivers is all of these demand trends coming out of the LBMA. That's the London Bullion Market Association. And you can see here all of the buying from central banks. And on this chart now you can see all the buying if you add jewelry or if you add electronics, which is right there, the little bit of electronics. But then the other big one that people don't talk about when they're talking about central banks, there's also buyers for gold for investments that are not central banks. And that's a massive portion. You can see right here how much that is. That's when a bank in America is buying up a ton of gold and bringing it back to stuff under the streets in New York beneath the homeless people. And the tariffs are definitely going to drive up prices of gold, and they already have, because people are trying to acquire their gold before they'd have to pay a tariff on it. That's one thing. It's a motivational factor. But also, tariffs have unintended side effects. They make domestic industries less efficient and innovative by reducing competition. They can hurt domestic consumers since a lack of competition tends to push up prices. If all of a sudden it costs you more to buy a car from Mexico or Canada, you might buy from America. Or you buy a product from Mexico or Canada that's going to cost you more, then you're going to want to buy it homegrown in America, which is great to get the industries back on our shores. But it's going to take decades, maybe, many, many years. So to get ahead of that, a lot of people are trying to acquire their gold now before these tariffs kick in. And there's a massive arbitrage trade right now where you can get gold from London for less expensively, lower cost than if it's in America. So they're taking gold from London, bringing it to America, and they're making that arbitrage difference. So that's another factor really driving the inflow of gold into America, which has gone positive since November. The gold market is experiencing significant logistical pressure as physical movements of bullion stretch global supply chains. According to index block data, gold prices in the U.S. have soared to near record levels, peaking just below $3,000 per troy ounce. This pricing anomaly has given rise to lucrative arbitrage opportunities where traders can buy gold in London and sell it on the U.S. markets for a substantial profit. And I've told you too about the overwhelming withdrawals or the bank run on the LBMA in London trying to get gold repatriated from there and how they're having trouble fulfilling the demands. Gold vaults in London, particularly the Bank of England, are witnessing over 20 million troy ounces of gold being relocated to New York's COMEX exchange. This represents the fastest outflow in over a decade, with more than $60 billion of bullion being shifted since the US presidential election. So that's why there's a lot of gold coming back. It's almost like a big international bank run. But the problem is the choke point. It's when there's, say for example, oil prices go down a lot, but then you go and pay more for gas. Gas prices go up. You say, why is that? It's all about the choke point, the refineries. The logistics of it makes it more expensive to provide the supply, regardless of the fact that the prices are coming down. Same thing with gold, exactly. Logistics companies and refineries are under immense pressure to handle the gold's transformation and transport. The process involves converting larger London standard bars into smaller ingots suitable for US exchange requirements, primarily conducted in Swiss refineries. So you've got gold coming out of London, goes to the refineries in Switzerland, and there's your choke point. And then eventually, once they've refined it, they send it back to America in the form that we need it here, because it's different than they needed it in London. That choke point is why people are having trouble getting their gold, and the wait list is getting longer and longer, which only drives demand more. It only makes people buy more gold, because you start to see this like a bank run. All of a sudden, people are having trouble getting their gold. They're going to want to be more aggressive in trying to do that. And there's been record repatriations, and I don't mean just an amount of gold, but also the number of countries that are repatriating. And it doesn't really matter in terms of total world gold supply or the prices or anything, because it's just a movement. You're just moving gold from one place to another. But the fact of how many countries are suddenly doing this, how many countries are suddenly repatriating gold, tells you something. Everything I talk about today, all 15 points, tells you one story. And I'll let you figure out what that story is, but I'll tell you that is Turkey, the Netherlands, Czech Republic, Venezuela, Austria, Switzerland, Belgium, Germany. These are countries that are just repatriating gold now, more recently. And there's a lot more before that, and there's a lot more to come. And yes, all this is pushing gold prices higher, and there's a lot more points I'm going to get to in just a second. But I want to say, for people who think it's too late, that it's not too late, especially with the way that all gold prices came down, the mining stocks and silver mining stocks, all came down so ridiculously aggressively. It was an overreaction, and it was not justified based on the companies themselves, how much money they're making, what it costs them to make that money, how long they need to operate to make that happen. This is a complete misunderstanding of the value of these mining stocks. And there's a lot of reasons for that, but the fact of the matter is, whatever is most unloved, which right now is gold and gold mining stocks, is always the great way to invest. And these stocks will go to where they're going to go. In the meantime, they'll bounce around, but even this 5% decline was really healthy. This is just setting them up at a more attractive base for people to start consolidating at that level and buying more, making a new floor at these prices. The outperformance of gold, blowing away every other asset class in 2025 so far, is definitely going to drive more speculative attention into the space. Consider it like a speculative awakening. People are realizing, wait a minute, there is money to be made here, and it is something I can understand and something that the world needs. One of the things that will drive it even faster is inflation, which we're in for a good bout of it coming up really soon, as is evidenced by you and my inflation expectations, which are very high right now. Few people think that inflation isn't going to go higher. When inflation rises, that's tremendously good for gold prices, and therefore by extension, gold mining companies that have all the right metrics in the right places. The ones that I look at, I tell you, yeah, these guys are okay. They're good, as opposed to a lot of the mines out there that are not going to do as well because they're running out of money or running out of resources or have bad management teams. Here's a screenshot of 5 years of inflation expectations. And this is actually one of the topics I'm talking about putting together for tomorrow's Insider Exclusive, which will be coming out. Some of the things I talk about in the Insider Exclusive for insiders only, peterleeds.com/insiders, talking about macroeconomic events, military events. There's a war that's going to accelerate pretty soon. Talking about real estate, talking about the stock market's overvaluation, all this stuff. Then you might want to get started with me for a couple of bucks. Become a Peter Leeds Insider. Cancel anytime you want. We got a new report coming out tomorrow on all topics in the economy. Meanwhile, you've got possibly lower interest rates coming up, especially if the stock market keeps acting like it's losing its mind. Donald Trump has talked about lower rates. Some of his economic advisors In the past, historically, Jerome Powell has been quick to lower interest rates when he got spooked by the markets. That's a matter of time. And now there's a global realization, which will also drive up gold prices, of the great American debt bomb and the fact that the US dollar is just a big Ponzi scheme. This is evidenced by how China and Japan, our two biggest creditors after American citizens, are lowering the amount of US Treasury bonds that they own, the amount of US debt that they hold. Here's how much debt they used to hold. Here's how much they own now. That'll continue to lower because they're not only not buying our debt, which is logical to me, but they're also not buying or rolling over some of the debts that they do have on their books. And this is going to continually bring the amount of US Treasuries owned by China and Japan lower and lower. The whole world, though, is recognizing that US dollar is being irresponsibly multiplied, just used for everything, even though it doesn't really have anything backing it. And it's just going to be pushing inflation higher, but it's also driving a lot of people who also want to get out of sanctions to go towards, I don't know, the BRICS currency. It's 60% of the world now is all ready to go in terms of using the BRICS currency. When they make it for the retail person, that will be the new reserve currency of the world. It's decided, it's over. It's already 60%, 60% of the population of the world is going to be using it. 5 countries hold about $3.3 trillion in US treasuries, roughly 40% of all foreign-owned assets. That's from USA Facts. But not only countries realizing and recognizing that the US dollar is not a great bet, there's also regular people like you and I are finally awakening to this. I've been talking about it for multiple decades, and now people are actually realizing. And decades ago when I talked about it, I was saying we're not yet too late, but kind of getting there. That was decades ago. Now it's too late, and I've told you this. That's why it makes a lot of sense that they do the gold revaluation, just to free up some room on the American credit card. That doesn't mean that they're going to do it. It just means that it would be a good thing logically for the health of the U.S. balance sheet if they would revalue gold to an extreme level. Whether or not they do it, I do not know. But you want to be positioned just in case. Some people may not even agree with me, but they say, well, at least I'm positioned in gold, silver mining stocks, because some of these things are going to happen. They're going to happen pretty quickly, maybe suddenly. You're going to want to be in the right place. And if it doesn't happen, that's okay. These stocks will still do really well. And gold is tapping at the roof of $3,000 an ounce. And when it hits that, that's a threshold level that'll draw more attention into gold, which will help drive more excitement and money into the space, which will drive up gold prices, gold mining stocks. When it hits a threshold level like that, it'll make the news. People will talk about it, and that'll just put people's minds onto investing in gold. But I want to be clear about the US dollar devaluation against gold. It's not a revaluation of gold as much as a devaluation of the dollar. It's an admission that we can't pay our debts. It's an admission that the dollar's worth only a fraction of what we thought it was. But just remember, it's a devaluation. You've seen other countries, like Mexico did this. You see other countries do that, and they might just say, okay, a $100 bill is now a $10 bill. But I want to remind you that you have to remember, this is not about the US dollar. It's not about America. It's about all fiat currencies worldwide. We're at a point, and everyone's pegging their currencies to the US dollar, and they're all related, or they'll take their lead from what happens with the US dollar and what they do with gold, then they'll decide what their currency is going to do. It's all a big web of everybody connected. It's all one thing. The point is, this thing of fiat currencies all having value in relation to each other, even though they all have no intrinsic value, is coming to a close. And this is demonstrated by a revaluation of how much gold is worth in terms of how many currency dollars are needed to be brought to bear to buy the gold. Think of it like an all-world devaluation. Everybody, in a time when the entire global economy is weakening, everybody's going to realize that the US dollar, for one, and all these fiat currencies, which are all at record highs in terms of how much gold costs in their currency, all of these currencies that are fiat, that experiment is coming to an end right at the same time that the position in the world of America compared to other countries is starting to wane. They're starting to lose their position. Just like Spain lost their position to England, which lost their position to America, which is now losing their position to China. But we do have a lot of gold theoretically in Fort Knox, in the New York Federal Reserve Bank, a couple places. And we're talking about getting Ron Paul to audit this. But what happens if they go to look at the gold and there's nothing there? Or some of the gold's been debased by putting other metals into it. And even if the gold's there, who actually owns it? Because a lot of the gold held there is owed to other countries already. If there's any gold less than total expected gold, that will drive up gold prices. If the gold that they pretend is there, it won't affect the prices. And the fact that the whole world is having a discussion about revaluing gold, that's the point. That's the driver. That's why gold prices will go up as well, just because of the discussion. I got an easier way for you to get in touch with me and get benefit from me is by becoming a Peter Leeds Insider. Costs you $3. Cancel anytime you want. And I tell you everything about everything I want to talk about, every opinion I have about every aspect of the economy on the first and third week of every month. Plus there's other bonuses too. So look into that, peterleeds.com/insiders, and connect with me. Topics I'm talking about in tomorrow's Insider Exclusive, which is coming out to anybody who's an insider, includes the military conflicts about to break out. It includes the markets, which have absolutely no momentum at all right now, neither higher or lower. And a recession coming up soon. And also real estate, which has two things going on right now at once. It's unaffordable and it's unattainable. That is going to break. It's going to drive up prices to where they are. And then when it can't go any further, it's going to come down really hard, really quickly. It's unattainable because home affordability is through the roof and ridiculous compared to if you're a new family trying to buy a house, the type of house you can afford, you can't afford. And it's unavailable because of the limited inventory. We'll both get fixed together when this market reverses and goes the other way. And I always tell you that most gold mining stocks and silver mining stocks go bankrupt. But the ones on the list that I just provided to subscribers at peterleeds.com are not going to go bankrupt because I looked at the financials and I showed you what the financials are. On this list, I had Peter Leeds approved stocks, 17 great gold miners, 3 great gold royalty streaming companies, 2 very early stage development companies, and these are the stocks that you put a few $100s into and your grandkids get a free mansion for it. You just got to be really patient. And of course, I didn't forget about silver. I had 9 silver focused companies that I think are going to do tremendously well. And especially now you can buy them at a discount, 5% off of where they were Thursday. Newmont Mining is a great example. I always talk about them as an example. They came out with wonderful earnings. They're making so much more money. Their profit margins are exploding. They just happen to have released their numbers on a day when everything's coming down, including the overall markets. And this is just a taste. We have so many great videos coming up you're not going to want to miss. So please subscribe to the channel and we'll keep helping you out as much as we can.